In this price action lesson, we're going to talk about how to identify high probability setups using price action rules. At this point, when I'm looking at the chart, the structure of the market is clearly a bearish downtrend working lower because the channel is getting confirmed. And at this point, I'm following the trendline rule. Now, why is that important? Because trendline rule says after there is a break close outside of the channel, I'm not expecting for prices to reverse, but rather I'm expecting for prices to create new extreme. And therefore, my bias right now still remains bearish. Now, the high probability setup for me to take and capitalize on this structure would be some form of a two-legged pullback second entry at the key entry point. The key entry point is either the trend line or the EMA, and there's always some trend line being present on a chart. There's always some channel pattern because these candles, they're following a specific pattern. There's a reason to price movement, and my goal as a price action trader is always make sense of the price action and where the market is going. So we actually have the lowest low where I'm going to reset the count from each new low. You have a small first entry short pullback, second entry short, but as you can see, it is getting a little bit stacked and the signal bar was bullish bar, so I'm being patient. And notice the EMA is starting to flatten and prices are pushing back higher. Now, I can see that the prices are entering right now some small form of a consolidation, which I want to be safe, so I'm going to mark the small little trend range. However, is anything changing? No, at this point, the bias still remains bearish and we are expecting for prices to create new extreme. So I'm thinking still that I should get a nice setup expecting new extreme. Okay, we're breaking higher and we're pulling back into this consolidation. This is a strong bearish rejection indicating, okay, sellers are selling at the top. We traded down and we're most likely going to break lower. So what am I expecting? Some little pullback, lower high confirmation setup, and we never get it. By the time I get a lower high, notice it is closing way too far down on its very low. So hopefully you can see why I'm following the bearish bias. The trend line has 3 swing confirmation, is getting confirmed, and prices are trending all the way down. And notice every single setup is far away from EMA, so I cannot take it. Now, at first glance, I can see that we formed a new extreme. We have a new low. However, I'm going to analyze the structure again because every single time prices attempted to break the EMA, we easily reversed strongly back to the downside. And this was quite a substantial downtrend. And once I see move like this, that is fairly close to low of the day, there's a chance that there may be a bigger pattern because prices most likely will not start a brand new uptrend in the middle of no man's land like this. So I'm expecting still for prices to create new extreme. So as I'm watching this, and you can see prices really continue working lower, this is where I'm going to look for potential wider channel. Let's say something like this. I'm just going to copy it, put it at the bottom, because this one fits nicely off these lows. At first I was selecting the highest swing, but if I'm going to use this one, you can see it doesn't fit that perfectly here. So I can use a very similar angle. This one fits perfectly here. And at this point, I don't know if this channel is valid, okay? That just remains to be seen. This is just an idea to confirm my analysis that the structure is too bearish and I expect for prices to continue working lower. Okay, I can delete this channel anytime. It may end up being invalid. That can happen. But at this point, because I'm reading the price action is being a little bit more bearish, I'm still following this overall bearish pattern. And I'm just relying on the naked candlesticks. I don't need any MACD, RSI, stochastics. All I need to do is just read the pure candles using the price action rules and understanding the market bias and what the market is going to do. Okay, we're pulling back to the EMA. So I'm going to redraw the short-term channel. And notice I'm drawing the short-term channels even for these tiny against the main trend corrections, because trend line will apply for both. I would be expecting second entry short and we're strongly breaking above the EMA, and notice what is happening. Once again, this is the lowest low of this move down. I'm going to reset the count. I'm counting for breaks lower. We have a first entry short, pull back, no break lower, no break lower, no break lower, no break lower. And this right here is the first bearish bar. If we trigger below this bar right here, if we break below this bar low, this would be a second entry short. And notice how broad and sideways those two legs are. You can see market likes to move in pairs of twos. The second leg is a little bit longer, but this is first leg, broad pullback, second leg, right confirming the channel. And I like going short here. It is a little bit more aggressive, but since this is such a tiny bar, and as a trader, you are taking a risk. This is calculated risk. The reward is bigger here. This is a great second entry short at the key entry point, because this is why you're looking for these channels, because this is going to be the key entry point, the place where smart sellers may be selling. I'm expecting for prices to create at least scalp It was too quick. However, I tried to take this setup myself on a limit order. It never got filled. And you can see this is where the price is generating a strong momentum. This is why we're looking for key entry points. And now we form a lower high, because this setup is now lower than the second entry short. And lower high is a confirmation setup of the second entry short. On my chart, the signal bar formed a little bit neutral. You can see it's still close at the level of the EMA. There's quite a stim at the bottom half of this candle. When I was watching this live, I wanted to see a failed second entry long to trap the bulls, to see a trap, but the signal bar on my chart is a little bit neutral. If you had slightly better bar, I can mark it, because context-wise, this is a great setup. Why? Because you're confirming the second entry short. You have quite a push down, so decent setup if you have better bar, especially closing on its low. And there is no failed second entry long. Prices are breaking higher. At this point, you broke this high, so I definitely cannot take it. I'm going to redraw the short-term uptrend because prices are trending higher. Okay, I was even looking for potential small little trading range because EMA is flattening. You can see EMA is flattening, but I would want to see push below EMA first before I'm going to start selling. And prices are trending to the upside. And notice we're closing outside and we're creating new extreme, new high. So what are you going to do at this point? What is the bias? Well, remember, we traded down, the channel got confirmed, and I still expect for prices to create new extreme. So even though we have some stronger bullish trend right now, they close outside and create a new extreme, that doesn't mean I can just switch the gears and start thinking about long opportunities. No. Based on price action, which is telling me we're still most likely going to create new extreme, and most likely the low today is also going to be tested. Okay, so at this point, I'm still thinking more bearish. Okay, when I see this, I'm expecting a failed second entry long below EMA. Don't really like lower high because it's not confirming anything. This was too bullish. But we're breaking higher again. Okay, so this is a little bit confusing. Let's see what's going to happen. And now you have new low, first entry short, pullback, second entry short. Now this is more advanced because I was definitely expecting for prices to go lower, but this one little push higher made me second guess my analysis a little bit. Am I reading this correctly? Is this channel truly confirmed? What if there is a bigger pattern? But I couldn't really find bigger uptrend. You cannot draw uptrend like this. This is too broad against the main trend. It's not confirmed at the top, so I definitely cannot draw this. So this is a second entry short. It's more aggressive. Oops. But notice the signal bar. All the bulls must have gone trap here, going long here, but you have new low, first entry short, pullback, second entry short, great momentum. If you're advanced trader and you're thinking still bearish, and prices are trending lower. Okay. At this point, I'm really expecting failed second entry long. Prices are breaking back up. And notice what we have. Triple test. Okay, you can see the price action is reacting to certain key levels, to certain key entry points. Price action is a language that is speaking to me. I have one top, double top, triple top. So this right here is a triple test. But the signal bar here is way too big, stim at the bottom. I couldn't really enter this. Okay, we're breaking lower. And we have a lower high, but it is also second entry short. And notice exact same pattern like here. New low, first entry short, second entry short. New low, first entry short. Little break higher above this bar, so creating the pullback. And if you trigger below this bar, it's going to be a second entry short. So I was ready to go short here, but it never triggered. It stalled, so I canceled my limit order. And you can see shortly after, the price action continued working lower. So unfortunately, we couldn't have really ended here. This would have been a great setup to take a short repeat pattern of this, and especially you're confirming the triple test. Okay, this triple test is a good sign that sellers are selling into the market, and you're going to create new extreme. So for this reason, you can trust the second entry short, because you just bounce off of this triple test. And you can see I'm speeding up the price action because we're so far away from EMA. I cannot sell at these lows because you never know when you're going to exactly bounce back up. Okay, so I'm going to mark this new low, but I'm going to zoom back and notice how bearish this was. Even though we have a break in new extreme, we have moved almost 60 points down. Oh, that's a little bit of stretch, 50 points down. So it's still substantial downtrend. I'm not really thinking about buying just yet. When the downtrend is this strong, even though you break new extreme, you never know how many pushes lower there's going to be. So I don't want to really take premature failed second entry short. And you can see the price action is confirming my analysis. We actually have second entry short, but I cannot take second entry short, new low, first entry short, second entry short. The signal bar is bullish, and this bar is way too big for double bar entry. So at this point, I would like a lower high confirmation setup, but it never formed. Okay, there is no break higher here, so still no lower high. And even you can't take it because so far from EMA. Okay, you almost have micro double bottom. I have potential lower high, but this is not really good because the signal bar is doji. It is an inside bar, and you already missed the boat. The lower high is supposed to form closer to second entry short. You can see you already made significant push down, and this feels like a late lower high. I cannot go short here because you already missed the boat. It was supposed to form right after second entry short before this move was reached. Okay, this is what is not supposed to happen. Now you already made a leg down as you were expecting, and you push higher, so you definitely cannot take this. In fact, this is where the brand new uptrend is starting. Okay, you have a first entry short, second entry short. Can I take reversal pattern? Not yet. We got rejected hard here, still too bearish. And notice what we have. Double trap, new low, first entry short, second entry short. All the sellers who got trapped selling too early, and all the bulls who got trapped going long too early, because the second entry short is horrible. Inside bar once again above EMA, and you can't go long this quickly. And I saw micro double top. All the bulls got trapped. Notice how tempting this felt. Second entry short must have been closing below while the bias is still bearish. I can even redraw the secondary helpful channel like this. That should get a new extreme. But I really like how tempting this felt second entry short was. And this was actually the trade that I took. I like the signal bar almost closing on its very low, and a great high probability setup. You can see the double top, and prices are continuing working. I was quite caught off guard. I didn't expect the market to sell off so strongly because you already have a new extreme and there's a chance for 2 legs down, but market keeps pushing lower and keeps pushing lower so significantly. So I was holding my runner, trailing it above each significant swing. You cannot really sell because you're still far away from key entry point. You want to sell at the key entry point because this is where the correction phase will end. So I'm just watching it. You can't really enter if you haven't taken this trade because everything is just so far away. Okay, and notice how strongly we're pushing lower. So at this point, I was considering, okay, I'm going to draw this channel because notice how far we are pushing lower. But at that point, I kind of reanalyzed the structure again. And remember, in price action, the market cannot continue working lower so steeply like this and working higher like this. There is a push phase, correction phase, push phase, and correction phase. And what can help you is a tool measured move. If I'm going to measure the first move, I'm going to copy it and place it here. You can see perfect measured move, especially if you go on a higher time frame, 10,000 tick chart. You can see larger two-legged pullback. So this told me, okay, we reached the measured move. The first leg has a break and new extreme, and we don't draw wider channels for the second leg. So at this point, I said to myself, okay, I'm not really supposed to draw a wider channel for the second leg. So I deleted this. And even though you made so many pushes lower, you have to respect the measured move. And what can also help you is, I even was eyeing a channel like this because this is really quite a decent downtrend now. Notice how far we have pushed lower. You're bouncing exactly at the trend channel line. And why is this important? This is important because this will tell you that the push phase will end at the bottom of the trend channel line, compared with the two-legged pullback, and the brand new correction phase may start. So a lot of traders sometimes get tunnel vision. You see market working lower, and you kind of forget what happened at the very beginning. This was the first leg, break second leg, and market just cannot continue working lower so steeply. There needs to be equilibrium, there needs to be correction phase. You can see you can combine with the measured two-legged pullback, trend channel line. So even if there is a second entry short, you don't take it, there is none, so no problem. I'm expecting a stronger pullback, okay. And now we have new high. First entry long, pullback, second entry long. So this right here is the second entry long. It is at the EMA showing support, indicating the buyers are buying. And we expect the high to be tested by the bulls because this channel needs to get new high. We expect stronger correction. We reach the measured move almost to the tick. Is this a good setup to take? Yes, if you have better bar. On my chart, this bullish bar is inside bar of this, and it's a little bit stacked. If it at least wasn't so stacked together. If you have better bar, you can definitely consider going long here. On my chart, it's one of those setups where you feel you're going to make a new high, but you can't really take it. And lo and behold, market continue working higher. Now, we're confirming the potential channel. Can I take a short? I don't really want to take a short. Why? Because the downtrend is too wide and too broad. And when the channel is this big, when the trend is this big, You never know if you're going to time it correctly because the trends are strong on their own. Exactly like when we have a large trading range day where the trends are so strong on their own inside the trading range, I cannot really fade. I cannot really pick a top, pick a bottom because the trends are strong on their own and I don't know how many pushes higher or lower there's going to be. I'm applying the same logic. Also, we never really broke below EMA. It still looks like a part of one move. So I really don't like taking a chance here. It's too bullish and the channel is too wide and you have 2 legs down. So we really need to see a failed second entry long below EMA to confirm it, to make sure I'm not just eyeing the 2 legs down. Okay, because if this is just a 2-legged pullback down, the downtrend may be invalid. Okay, I saw a couple traders took this lower high, which honestly, I can see why you took a chance here because trading is about taking a chance, but it looks like a one move up. We haven't even broke below EMA to create some sideways break. These are kind of the moves I like. When you have first leg, broad, 2 legs up. This seems still too bullish. Either way, if you took it, I don't think it's a bad setup because if you manage to get it, you can get a massive swing trade. And prices are continuing working higher. Okay, and at this point, I need to adapt because this is too bullish, so I'm going to redraw my channel a bit wider. Okay, and let's see what we can get. We have a new high, first entry long, pullback, second entry long. Okay, we have a second entry long, but we have shortened downtrend in play. It is second entry long right at the bottom of this support. So more aggressive trader can take it. Why is aggressive? Well, because you have shortened downtrend in play. You have shortened downtrend in play. A lot of times, if you have a failed breakout, the shortened downtrend is going to be in play. So this is not a bad setup to consider, especially the way it reversed. Nice bullish pin bar at the bottom, so sort of like a triple test combined with the EMA. And you expect the new extreme. Once again, the bulls expect the new high. But I would prefer to get high or low. Notice your stop loss goes 1 tick below the signal bar and you would have survived exactly by 1 tick. And this right here is a high low. I was getting ready to take this high low, but it formed so big, so I was waiting for trigger above this bar, dropping my limit order deep, and it never triggered. Once it stalled, it never broke above this bar high, the high low never formed, and I canceled my order, and nothing I can do. It was too big anyway. Okay, market is stalling. Gotta be patient. I was anticipating failed second entry short, new low, first entry short, second entry short. Was ready to go long here, but once again, never broke its high, so no setup formed. Fortunately, otherwise I would have gotten stopped out here. This is why we are waiting for trigger. You cannot enter too early without there being a setup. You always want to see a trigger 1 tick above the signal bar or below if you're shorting. Okay. You have a sort of like a small fair breakout out of this congestion. And you have second entry long, first entry long, second entry long. But you just have a break at new extreme. So, not a bad setup at all. I can move a little bit lower and actually have some bounce here. But a little bit more advanced. It is a second entry long. Once again, more advanced trader can consider because the signal bar is great. And the support is here holding. Okay, you break a new high. Okay, I don't really see anything great. Another new high. We're breaking high. Okay, so at this point, I'm going to redraw the spike and a channel because I can see that after new high, we keep pushing higher, we keep pushing higher, and we keep pushing higher. The bullish momentum is still present in the market and it's still strong. And by the way, at this point, I forgot, I already deleted the channel because once you push higher here, it looks like it's invalid. It was a 2-legged pullback. So I'm just focusing on longs. We have overshoot. You know, if you can spot the channel early, you can make a case for a couple of longs here, but it's not that easy to find it early because you have no swing here, so you have to wait for this swing, and then you have to act quickly on your feet to be able to manage to catch this trade. You know, so it looks good in hindsight, but when you're watching this live, it's quite hard to find the proper channel here. You know, once again, depends if you already have this channel. But I don't think that many traders would be able to have it. Not that I want to insult you, but I think it's very hard to spot the channel like this because you have no swing here to help you set up the trend line. If you have swing here, this is a third swing confirmation, perfect, but it's just confirm the trend line. Either way, if you got one of these key entry points already early and you can see strong rejection, you can go long. We have an overshoot, so we can generate strong momentum in opposite direction. We can break the channel or possibly reverse. Okay, I'm gonna redraw the short and downtrend. Camera go long because we have overshoot. Okay, gonna redraw a brand new short and downtrend because we created a double top. This is where the news were announced. You never will be trading exactly around the news. For this reason, I'm being patient here, so I'm skipping through this. We're around the news. It wasn't that volatile anyway, but you don't know this. You definitely want to make sure to check every single high impact news you get. And you can see the price action is still quite normal, so fortunately not that volatile. We broke the trend line after overshoot as expected. What is the bias? It's bullish. We expect new extreme according to trend line rule, and also you can see not only we have spike and a channel that needs to get new high, we have a flat EMA, completely flattened, and we have multiple lows here showing rejection. And once again, there's a reason to price movement. I'm following these candles by looking for channels and drawing these micro key levels because the price action is reacting to them. Not that you want to take blindly the key levels, but you're using them to combine it with the overall channels and the bias. And notice what you have. New high, first entry long, pullback, second entry long. This is second entry long off the support while the bias is bullish and you expect new extreme. Great setup. Confirming the support. You expect new high. The market is continuing working higher. I'm going to redraw the shortened channel. Okay, we have a break and we have a new extreme. So the shortened channel reached new high, and even the spike and the channel created a break and a new extreme. So you can see one top, double top, triple top. All channels have new extreme. So what are you expecting? Let's see what's going to happen. We're pushing below EMA. Okay, so this is a good sign for bears. We have a spike and a channel break new high. And we have lower high, strong rejection. This is a bull trap because everybody who went long here, one take, just got trapped. And since you're confirming the triple test, and it's such a strong tier 1 signal bar, this was a quick momentum, great lower high, confirming the triple test. You would be expecting also for second entry long, and market is trending all the way down. So remember, I need to redraw the channels. Are you looking to fade the breakout to go long? You're not, because the channel is in play. All options played out. Okay, we're trending lower. Strong downtrend. Okay, we have break new extreme, so I'm going to mark new low. And once again, I have new extreme, yes. But analyze this price action. Every single time you push so far down and you have a break in new low without even touching the EMA, you know, the structure is just too bullish. I'm not really looking for a reversal. I expect one more push down. I don't know this. If we're going to strongly push above EMA, I'm going to reconsider. But every single time you fail to even touch the EMA and you have a small break new low, you know, chances are high that prices are still going to create one more push down. Okay. That doesn't mean I can take second entry short because I have at the end of the day new low. Okay, I have new low, first entry short, second entry short. I cannot take it. I just had new extreme. I cannot break the rules. Okay. Felt second entry short, but it's below EMA. I definitely cannot take. And notice what you have. Lower high, confirmation of the second entry short. New low, first entry short, second entry short. Uptrend played out with the break new extreme. You also have some small double top forming. And this right here is exactly what you're looking for when you're unsure. You're anticipating this to be too bearish, but you can't take second entry short. But now that you see that all the bulls got trapped below EMA, if you're thinking bullish above felt second entry short, you need to see felt second entry short above EMA. The fact that it formed below tells you you cannot go long. The fact that it's below, it's actually a good sign for bears and a great tier 1 signal bar, great lower high confirmation of the second entry short, right at the EMA, high probability setup. And at this point, I'm going to redraw the short and uptrend, break new high, but the signal bar is bad. Hard to say what exactly is the bias here, but we keep pushing lower so strongly. Okay, only first entry short, and the market is trending all the way down, and at this point it's getting too late. So overall, finally decent price action, fairly predictable. There were a couple of these fairly decent setups. Few of them were nice. Some of them you had to have a slightly better signal bar, but you can see the two-legged pullback, measured move, strong rejection, and we can already potentially make a case, because if I'm going to redraw this, the downtrend was too strong. You can see it created a break. If I'm going to really zoom out, break, and eventually retested the new extreme for the downtrend. It's just that when the trend is this broad and you can see such a strong bullish momentum, you have to adapt, because the uptrend is so strong you cannot really still think about getting a new extreme. We are scalpers, so follow the short-term price action, and eventually you can see the prices are working lower, and this is why the prices, even after there's a break new low, we keep still pushing lower, So I hope you had a decent trading day, and I'm going to talk to you next time.